An example of prime cost method depreciation, otherwise known as straight line method depreciation. So we're at the AssetAccountant application, which you can find at app.asset.accountant. And once you have an account, assuming you've created one, or you're a customer, or you're trialing our software, you just put in your username and your password to sign in. Once signed in, you will be greeted by the dashboard, and I'm just going to go to a register that I'm using for testing, and this is a view that you'll see. You'll see we've got the name of the organisation, the name of the register. You can toggle between tax view and accounts view, and you can also select which period you want to have a view in. So we're just looking at the current period. Asset groups is the next tab over, and you'll see furniture and fittings, computer equipment, just 5 of the standard ones. For today's exercise, I'm going to choose furniture and fittings. And in here, you're able to allocate a name, a description. You can put in cost, capital gains tax allowance if you want that to be accounted for. But most importantly here is the group depreciation settings. So here is your method for tax depreciation and your method for accounts depreciation. You can choose what defaults to any asset you add in this asset group from here on. And yes, you'll notice you can put in different values. So if you want to show an asset for accounts view and one for tax view, that is entirely possible. So let's add, if I go to assets, I'm going to add a new asset. Let's just call it a test asset. We are able to put in serial numbers if we wish to do so, and I'm going to allocate this particular asset to furniture and fittings. Let's say it's $1,000 and our purchase date is the 1st of August here. And this is where we get to choose whether we want to apply, or what values we want to apply for tax depreciation and accounts depreciation. So I'm going to leave this just as the standard prime cost over 10 years for both accounts and tax. And I'm going to save this. So what I'm going to do is I'm just going to change our view to this financial year, and you'll see it projects the depreciation using the prime cost method over this time. So it allows for, we've got our purchase, which is $1,000, which was on the 1st of August. And what it does is it calculates the $100 per year, which is our 10% depreciation, as a daily value, and then multiplies that depending how many days in the month to give us our depreciation. And it is as simple as that. So at the end of the financial year, we can actually see that our written down value is $908.49.